Hey, what's going on, guys? So big day for Ethereum. It's up over 20%. The revenge rally is here. So let's go ahead and dive in. But first, let's take a look at why the markets are rallying so much. So it came out that President Trump was able to do a trade deal. Now, my understanding is that we have $6 billion in new tariff revenue coming in. U.S. tariffs on imports from UK raised to 10%. UK tariffs on imports from the U.S. lowered to 1.8%. $5 billion in new exports. So there's a lot of drama going on. There's a lot of politics here. I'm not trying to get into that. What I am going to say, though, is that the market is reacting to this because it's a sigh of relief that because he removed they were never implemented, but there was 25% tariffs that were threatened. And so that relief has come. And so the market is reacting to this as a sigh of relief. Oh my gosh, thank you. It looks like he's going to get these trade deals done, and we're only going to have 10% tariffs. We're not going to have these crazy numbers that essentially crashed the entire market. So this is a really good sign that we're seeing this first trade deal get implemented. And then the other thing was the stablecoin bill. So we'll get into that in a moment. But first, let's take a look at the price here. So, as many of y'all know, I have this long super cycle target here, right? And if we zoom in, what you'll notice is that we're reacting very strongly to this trend line. And I'm just going to zoom out here real quick. So you can see the trend line here. It's been going on all the way back to 2017. You have multiple touches, and we are reacting off of it. And so just zoomed in here, you can see that we get this big reversal candle here on the weekly, and on the monthly, it looks even better. And we're getting this V-shaped recovery as we're getting these trade deals come in. The market's feeling much more certain, and we're up net more. We're almost at 2,200 now. So I do expect we're going to have a very nice recovery here. We could get all the way up to 2,500. We'll have to see what the market does. It is going to run into a little bit of resistance up here around the 2,500 mark. As you can see, price chopped around. But this is it, guys. This is the recovery. And we'll be off to the races. Now, the only question is how high we're going to go. Keeping in mind stablecoin adoption is very quickly accelerating. So I think that that's going to play into a lot of this rally. My absolute top target here is going to be 80,000. Even if I'm half right, we're talking, if we get up to the lower parallel here, we're talking a $30,000 Ethereum to a $40,000 Ethereum. I think those are likely targets. This nonsense of, maybe we'll go to 7,000. It's just not happening. This is a store of value asset. This is a commodity that is going to be securing the entire digital economy going forward. So, if people are going to start waking up to that, a lot of the Wall Street funds that are not exposed to Ethereum will begin to FOMO and panic into it as they realize that they have evaluated the asset incorrectly. Many of them have valued it correctly and they are exposed to it, but the ones that haven't are going to start to panic because they're going to be like, oh my gosh, I'm not exposed to this new emerging asset that is going to become a very strong, stable store of value as the entire world's economy is dependent on it. So a little bit of bad news, but it's kind of good in a way. I'm going to look at this in the positive light. So the Genius Act, the stablecoin bill, didn't pass the Senate. It failed by one vote. So to me, that's a good thing because that means that we are very, very close to an agreement. So what's going to end up happening now is this is going to go back to a vote. They're going to revise, renegotiate, and try to get this thing pushed through. But the fact that we're so close, we're within one vote of this being passed. I could be wrong on that, but I'm pretty sure it would be just a vote. I don't think you need a super majority or something like that. Okay, so I just looked that up for y'all. It's actually, we need 3 votes. So it has to be 51 votes for it to pass. But I mean, again, my point still stands. We're so close to getting this deal done. And as soon as it does, we're going to see the floodgates open for stablecoins flowing into the market. Some estimates between 2 to 3 trillion stablecoins will flow into the market over the next couple of years. And the overwhelming majority of those are going to be on Ethereum. Now, what does that mean? That means that we're going to have 2 to 3 trillion worth of stablecoins, but those stablecoins have to be backed by something. In my opinion, the best way to back those would be with U.S. Treasuries. And so if you also see 2 to 3 trillion worth of tokenized U.S. Treasuries come on the market, That means within the next 2 years, we could very easily see about $4 to $6 trillion worth of real world assets tokenized onto Ethereum. So moving on to a post from Decent Muse, shout out to them. They did a very good job on this article, or I guess a tweet rather. So the Pectra upgrade just went through. And so the U barrier here, this is the, essentially it needs, whenever we hit 8.7 gas, that's now the barrier for Ethereum to go deflationary. And so you can see there's a series. I mean, this is incredibly bullish, guys. You have a series of upgrades, updates that are going on to the network to improve it, to make it more capable to meet the demands of the world. And then we're going to end up getting down here to where it's deflationary at 2 gwei. Two. I mean, that's so small. That's very easy for us to hit. So, this is extremely bullish because, the burn, in my opinion, it's essentially, it makes it stronger as a store of value because you have this scarce commodity that the world is going to depend on to secure and settle all of the world's assets and value. And it's becoming more and more scarce over time. It's almost as if you have gold and suddenly there's a way, I know physics, we can't destroy gold, but it's almost as if we have this scarce commodity and the supply is becoming less and less and less. It's like if you had oil and there was a fixed supply and we are gradually running out of that oil, it makes the commodity much more valuable over time. So this is, and it strengthens its store of value property. So this is a really big deal, very big deal. So moving on to the next one. So Treasury Secretary Scott Bessent says crypto needs U.S. leadership to thrive globally. So again, just asserting that they are adamant about pushing forward with crypto adoption in America. Now, Hester Pierce says that the agency is considering conditional exemption to allow trading of tokenized securities using blockchain, aiming to foster innovation while aiming investor protections. So again, we talk about this scenario where Ethereum could potentially go to $80,000 this cycle, and we've already established that with stablecoins, they're estimating between 4 to 6 trillion. 2 trillion worth of stablecoins, 2 to 3, and then the equivalent amount worth of tokenized treasuries. So that puts us around the $4 to $6 trillion worth of real assets on the Ethereum blockchain. And now that doesn't include tokenized securities. So, how many trillions of tokenized securities are we going to see go onto the blockchain? So it's very possible that we see $10 trillion of tokenized real world value being secured by Ethereum. And how do you get exposure to that? With ETH, the asset. So again, we have this coming out here. U.S. federal regulators say that banks can buy, sell, and custody cryptocurrencies. Again, we've seen this before in the past with the letter they put out from the Office of the Comptroller saying that they can, and now they're making public statements about it. We're seeing crypto adoption rush in at an institutional level like we have never seen before.
More than 50 million Americans hold some form of cryptocurrency. This digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we confirm that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers. OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers. The banks we supervise also may buy and sell cryptocurrencies they hold in custody at their customers' direction. Additionally, these banks may provide other custody services, including record-keeping, tax, or reporting services for their customers. OCC banks may use a sub-custodian to provide the same services, subject to appropriate third-party risk management practices. While a range of cryptocurrency and digital asset activities may be performed by banks and their third parties, I want to be clear that the OCC expects these activities to be conducted in a safe and sound manner and in compliance with applicable law. To learn more, please visit.
So there you have it, guys. We are really rushing fast into an entirely tokenized digital economy. This is going to be similar to the Industrial Revolution. We're moving into a tokenized revolution within the economy. So this is just very exciting times, guys. So I think that pretty much wraps up today's video. Until next time, I'll talk to y'all soon.